session. I am CA Shefali Jain.
I am CA Swati Agrawal.
We both are your mentors for today's session. In today's session, we'll take the amendments made in the area of CENVAT credit. CENVAT credit is covered in Chapter 7 of your study material. As you all must be aware that there is substantial emphasis in the examination on the recent amendments. Therefore, in this session, we'll cover the amendments in the CENVAT credit. And for May 2016 examination, the amendments made by the Finance Act 2015 as well as the notifications and circulars issued till 31st October 2015 are applicable. In this session, we'll cover the amendments made in CENVAT credit from 1st May 2014 to 31st October 2015. That is, we'll cover 1.5 year amendments. Okay. Out of these first 1 year amendments, that is from 1st May 2014 to 30th April 2015, will be covered in supplementary study paper 2015, and balance 6 months amendments, that is from 1st May 2015 to 31st October 2015, are covered in Part 1 statutory updates of revisionary test paper for May 2016 examination.
We will take all amendments sequentially. We will advise you to first listen the lecture carefully, understand the amendments, and then come back to us with queries. You can also ask the queries via email. Let me first surprise you with the relevant publications applicable for May 16 examination. In case of study material, September 15 edition is applicable for you. Also in case of practice manual, the edition is same as in case of study material. September 2015 is applicable for May 16 examination. Also, for appearing in May 16 examination, in addition to study material and practice manual, you also need to refer the supplementary study paper 2015 along with Part 1 statutory updates of revision test paper May 16 examination. Can we move to PPTs, please?
Students may note the disclaimer statement. Students are advised to refer to the study material, including supplementary study material if any, and other relevant legislation for latest provisions or amendments required for the forthcoming examination. Now, before going to the amendments, let us first of all quickly recapitulate the concept of CENVAT credit. Now, what would have happened in case there was no CENVAT credit? In the absence of CENVAT credit, let us understand it with the help of an example. The raw material supplier, he would have sold, suppose he has to supply the goods to manufacturer and he has charged ₹100 from the manufacturer. On this, he will charge the excise duty also. Rate of excise duty we have assumed to be 10%. It's a fictitious rate we have taken here for your convenience. So excise duty will be charged at rupees 10. So cost of these raw material to manufacturer will be 110 rupees, because in this case CENVAT credit is not there. So excise duty is not CENVATable. It will form part of cost. So cost to manufacturer will be 110. And on this 110 rupees, it will charge 10% excise duty, which will come out to be 11 rupees. So the selling price of manufacturer after adding the value addition of 10% will come out to be 121. That is 110 into 10%, that 110 plus 11, 121. And on this selling price, he will again charge an excise duty of 10%, that will come out to be rupees 12. Now, since CENVAT credit is not there, so entire excise duty of 12 rupees has to be paid in cash by the manufacturer. So, overall, what dealer has to pay while buying the goods from manufacturer is the selling price of manufacturer 121 plus the excise duty of rupees 12, that is 133. The cost to the dealer will come out to be 133. Now let us see what will happen in case the CENVAT credit is there. When the concept of CENVAT credit is there, then we'll start from the same selling price of the raw material 100 and the excise duty is again rupees 10. Now the cost to manufacturer will be only rupees 100 and not 110, because this 10 will not form part of cost. It is CENVATable. CENVAT credit of rupees 10 will be allowed to manufacturer while paying excise duty on the final product. So cost will be 100 and on this value addition of 10% will be there. So his selling price will be come out to 110 rupees, on which excise duty at the rate of 10% will be rupees 11. Now while paying this excise duty of rupees 11, he can utilize this 10 rupees credit. The credit, the excise duty which he has paid on the inputs or the raw material, he can utilize this while making the payment of rupees, making the payment of the excise duty on the final product, and therefore in effect he has to pay the excise duty of only ₹1 in cash. 10 rupees he will utilize from the excise duty paid on the raw material. So therefore his selling price will be 110 and his excise duty payment in cash will be ₹1. So overall the dealer, what he has to pay to manufacturer is 110 plus 11 rupees excise duty, and his cost will come out to be 121. So you can easily make out that when CENVAT credit was there, the cost to dealer has reduced from 133 to 121. Okay. Now this is the benefit of CENVAT credit. Under CENVAT credit, in case of a manufacturer, what all credits are available? The credit of inputs, input services and capital goods. Whatever excise duty he has paid on inputs and capital goods, and whatever service tax he has paid on input services, as per the provisions contained in CENVAT credit rules, he will be eligible for credit. But the manufacturer should be manufacturing dutiable goods which are liable to excise duty. In case of an output service provider will be eligible for CENVAT credit of the excise duty paid on inputs and CENVAT excise duty paid on capital goods and service tax paid on input services, provided this output service provider is providing the taxable output services which are liable to service tax. Now let us move to the amendments in the CENVAT credit. First amendment is there in Rule 4.
So coming to first amendment, which is there in case of Rule 4, as we know that Rule 4 is in relation to conditions for allowing CENVAT credit in case of inputs and capital goods. In case of inputs, credit may be taken immediately on receipt of the same by manufacturer as well as output service provider. So let us first understand the situation which was existing prior to amendment. In fact, it is always better to understand the situation existing prior to amendment, as it helps in understanding implication of the amendment in the better manner. So let's understand the situation which was existing prior to this amendment made in Rule 4. Rule 4 is relates to conditions for availing. Conditions for availing CENVAT credit on inputs and capital goods. In case of a manufacturer, CENVAT credit can be availed by him as soon as the inputs are received in the factory of manufacturer. However, in case of capital goods, manufacturer can avail CENVAT credit even if they are received outside the factory, but they should be used for generation of electricity for captive use. Similarly, in case of an output service provider, CENVAT credit can be availed in case of inputs and capital goods if they are received in the premises of such provider. However, there is a flexibility provided to an output service provider. There is a flexibility in case of an output service provider that even if the inputs and capital goods are delivered to such provider on maintenance of documentary evidence of delivery and location, then an output service provider can claim CENVAT credit thereof. So now let's switch to the amendment which has been made applicable in case of Rule 4. The amendment which is applicable in case of Rule 4 is that now, as earlier I have discussed with you, in existing to two conditions, manufacturer can also avail CENVAT credit in case of inputs and capital goods which are received in the job workers' premises. If inputs and capital goods are received directly in the job worker premises, they should be received directly on the direction of manufacturer or output service provider, then they can claim CENVAT credit. Similarly, in case of an output service provider, as you can see from this slide, that these two conditions existed prior to amendment as well, but this amendment has been made in case of an output service provider. That even in case of an inputs and capital goods, if they are received directly to the job worker on direction of manufacturer or output service provider, he can claim CENVAT credit thereof. It may be noted that this amendment is taken just for ease of doing business. It is an industry-friendly amendment, and one more flexibility is there, that it saves lot of time and cost in case of a manufacturer as well as output service provider. Earlier, what used to happen was manufacturer or output service provider used to receive inputs and capital goods first in their factory, and then they direct that to the job worker. So it used to take a lot of time and cost. Now this has been done away with, and it leads to ease of doing business. Now you must be thinking, so what is this job worker, a new term which is used here? Job worker is a common term in normal practical situations. Many times what happens is that manufacturer does not undertake whole manufacturing process himself. Job work is defined in CENVAT credit as well. Job work means processing or working upon of raw material or semi-finished goods which are supplied to a job worker so as to complete part or whole of the process, which results in manufacture or any process which is essential for aforesaid purpose. Thus, in simple words, you may also relate it with job work means outsourcing. Means the main manufacturer outsources lots of activities to job workers so as to save his time and cost. This is a summarized position in case of the amendment made in Rule 4. Earlier, what used to happen was supplier used to send inputs and capital goods to manufacturer or output service provider, and then a manufacturer or output service provider used to send them to job worker for outsourcing his manufacturing related process. Now, this is not required, and a supplier can directly send to job worker, which saves time as well as cost. So this is an industry-friendly environment, and it leads to help the supplier in case of early production of manufacture as well. Let's come to the second amendment which has been made in Rule 4. The next amendment is also in relation to job work. So first let us revisit the situation as existing prior to amendment in this case also. Earlier what used to happen was when a manufacturer or an output service provider used to send inputs or capital goods to a job worker after being partially processed or after doing some work to job worker, then for further processing, testing, repair, reconditioning necessary for the manufacture of final products, and it was established from the records of challans that they are received back within 180 days or 2 years, then they can claim CENVAT credit thereof. But now the time limit for receiving of inputs has been changed in case of if inputs are sent to job worker, then there is no change in time limit. And in case of capital goods, the time limit for return of capital goods from a job worker to a manufacturer or output service provider has been increased from 180 days to 2 years. So now it may be noted here that there was a common time limit for 180 days for the return of inputs and capital goods. Now this provision has been amended. As per the amended provisions, the time limit in case of capital goods has been extended to 2 years. So a point to note here is that time limit for inputs has not changed here. You may note here that instant credit availment in case of inputs as well as capital goods is not unconditional. It means that inputs and capital goods credit is allowed only if they are used in the process of manufacture. So this reversing of inputs and capital goods to a manufacturer is there, so that to ensure that these things are used in the process of manufacture. As in case of if the goods are sent to job workers, then it might happen that these inputs and capital goods are not used in the process of manufacture at all. So the credit is to be, so in case the goods are not sent back to the manufacturer or output service provider within the prescribed time limit, then the credit taken has to be reversed. And whenever the inputs or capital goods are retaken by the manufacturer or output service provider, the credit can be taken by them. Now let's come to the another amendment, second amendment, which has been made in Rule 4, that is time limit for claiming CENVAT credit. It may be noted in this case that before 1st September 15, there was no time limit for availing. There was no time limit for availing CENVAT credit in case of input services, as well as in case of capital goods. However, from 1st September 14 to 28th Feb 15, therefore, only for the purpose of this intervening period, the time limit for availment of credit in case of inputs and input services has been prescribed as 6 months from the date of invoice. It may be noted in this case that there is no time limit in case of capital goods. However, now let's come to the amendment which has been made in this Rule 4, the second amendment which has been made, which has become effective from 1st March 15. The time limit for availing credit in case of inputs as well as in case of input services has been enhanced from 6 months to 1 year of the date of invoice. Earlier, as I have discussed with you, it was 6 months and now it is 1 year from date of invoice. But in case of capital goods, there is no time limit as earlier. So in case of inputs and input services, the time limit has increased from 6 months to 1 year. And in case of capital goods, there is no time limit. So let's take an example. Let's say if a manufacturer has received inputs on June 20, 2015 and he wants to take credit on September 10, 16. An invoice is also dated January 20, 2015. So, can a manufacturer take CENVAT credit of inputs on September 10, 16? No. As he can take CENVAT credit only within 1 year from the date of issue of invoice, and after the elapse of 1 year, the CENVAT credit cannot be taken by him. Now, there is also a clarification. As we all know that circulars are for clarification purpose only, issued by CBEC regarding this time limit. As we all can see from the date of the circular, that this circular was applicable, was issued when the time limit for the availment of CENVAT credit in case of inputs as well as for capital goods was 6 months. I'm sorry, just I was mistaken. It was this time limit for availing CENVAT credit in case of inputs and input services, not in case of capital goods. So this circular was issued when the time limit for availing CENVAT credit was 6 months. But as the principles remain the same, so this circular will also hold good in the current scenario. What it says is that when the credit is taken for the first time on the basis of an eligible document, then only this limitation period for availing credit on inputs and input services is applicable. What is mean is that whenever the credit is not taken for the first time, but it is taken because of other reasons, like when a reversal takes place and a credit is taken on for the second time, like recredit. Just like recredit is taken of amount reversed under Rule 47 or 35B or 458, this circular is not applicable. What it means is that the limitation period for availing credit, that is the time period given for availing credit, that is 1 year of issue of invoice, is not applicable in case of Rule 47 of CCR, where the recredit is taken of amount reverse, recredit is taken of amount reverse under Rule 35 or Rule 45A. Second, just to make aware of you that Rule 47 of CCR, as we know, pertains to reversal of credit if value of input service and service tax payable is not paid within 3 months. Rule 35B, when inputs and capital goods are written off before use, and Rule 458 pertaining to job worker provision, which I have just discussed with you earlier.
Now, next amendment is with respect to CENVAT credit availment under reverse charge. Actually, earlier there was different timing for CENVAT credit availment under partial reverse charge and under full reverse charge, which has now been aligned. But before coming to the amendment, I would first of all like to explain you that what is the concept of forward charge and reverse charge and how we avail the CENVAT credit under both the charges. And then we'll come to the amendment that what is the actual change which has taken place in the availment in case of partial and full reverse charge. Now, CENVAT credit, the service tax is payable in two ways. Forward credit mechanism in two mechanisms. Actually, these are two mechanisms of paying service tax: forward credit mechanism and reverse charge mechanism. Forward charge mechanism is that when service provider is liable to pay service tax. Actually, service tax is an indirect tax. So liability to pay service tax is always on the service receiver. That is, the service receiver has to pay service tax from his pocket. Service provider will just collect it from service receiver and pay it to the government. So when service provider, what differs under the the reverse charge and under forward charge is the person who is liable to deposit such service tax to the government. In both the cases, service receiver is going to bear the burden. Service receiver is going to pay it from his own pocket, but the person who is going to deposit it to the central government will differ in both the forward charge and reverse charge. In forward charge, service provider will pay it to the central government. He will deposit it to the central government. In reverse charge, service receiver will deposit it to the central government. This is the difference between the two charges. Now let us understand it with the help of an example also. We'll see how the service tax is paid in. This is an example where three service providers are there. Service provider A, B and C, and they are providing service X, Y and Z respectively to the final consumer. C is providing service to the final consumer. Now when service provider A provides service, suppose he charges a value of rupees 100 from service provider B and charges a service tax on it of rupees 10. This is a fictitious rate which we have taken for convenience of calculation. So now when B will take service from A, then he will pay to A the value of service 100 rupees plus the service tax which A has charged from B. Both these amounts he will pay to A only, because in this case the forward charge mechanism is applicable and A is liable to deposit the service tax of rupees 10 to the central government. Then B will provide service Y to service receiver C. In this case, now he will charge, his value is rupees 120 and therefore he will charge a service tax of rupees 12. Now C will pay both these amounts 120 as well as 12 to B. C will pay these amounts to B because B is the service provider and B is liable to deposit this 12 rupees of service tax also to the central government. So value anyhow C has to pay to B only because he has received the services from B. But this service tax amount also, since it's a forward charge case, so in this case this service tax also C has to give to B and B will deposit it to the central government. Then comes the services which C has provided. C has provided the services to the final consumer. So final consumer will pay both value as well as the service tax which C has charged to C, and C will deposit the service tax to the government. Now what will be the credit mechanism in this case? How the credit, what amount of credit will be taken? Now we are dealing only with the quantum of credit. I will tell you the procedure later on that at what time credit can be availed, but what will be the quantum of credit which each of them can take? A will pay rupees 10 in cash because we are assuming that he has not received any input services or he has not utilized any input services on which credit was available. But now B, when service provider B is receiving services from A, he has paid service tax of rupees 10 on his input services. Now this will be available as CENVAT credit to B, and out of the total 12 rupees which B has to pay to A, which B has to pay finally. This is the output service liability in fact. So this 12 rupees which B has to pay, he will utilize the 10 rupees which he has to pay A as service tax on input service. So overall, in effect, he has to pay only 2 in cash and 10 rupees he will utilize the service tax paid on input service as CENVAT credit. So his total liability is of 12 rupees on his output service Y. His output service is Y, on which he has a service tax liability of 12 rupees, out of which 10 he will utilize the CENVAT credit and 2 he will pay in cash. Okay. Then comes the service provider C. Service provider C has to pay a service tax of rupees 15 on his output service, out of which 12 rupees he will pay utilizing the CENVAT credit, which he has paid on his input service Y, and 3 rupees he will pay in cash. Okay, so overall tax paid in cash of A, B and C is 10 rupees, 2 rupees and 3 rupees respectively. Final consumer has to pay everything in cash and he cannot utilize the CENVAT credit also because he is not engaged in any service providing activity. Then under reverse charge. Under reverse charge, what change will occur is that the service receiver has to pay or deposit the service tax. Service receiver will anyhow bear the burden of the service tax, but in this case, the deposit also has to be done by the service receiver. In this case, A provides a service to B and he charges a value of rupees 100 and service tax at the rate of rupees 10. So now when B will make payment, he will pay rupees 100, that is value, to A, and the payment of service tax will not be to service provider. He will make the payment of service tax to the central government because he has to pay service tax under reverse charge. Similarly, when B will provide service to C, C will make the payment of value of rupees 120 to B, and the payment of service tax of rupees 12 will be made by C to government and not to B, because he is receiving services under reverse charge mechanism. So since C is a service receiver, he will be liable to pay service tax. He will be liable to deposit service tax to the central government, and then he will provide it to the final consumer. Final consumer will also pay only value to C, and the service tax of rupees 15 will be paid by final consumer to the central government. Let us see the quantum of credit which each of them can avail. A has to pay entire service tax in cash, that is of rupees 10 on his output service. B, the output service tax liability of B is 12, out of which he can utilize the credit of rupees 10 in payment of rupees 12, and he has to pay only rupees 2 in cash. Similarly, C has to pay only rupees 3 in cash because while making the payment of service tax on output service, which is rupees 15, he will utilize rupees 12 as the credit of rupees 12, and finally he has to pay only 3 in cash. So if we compare both forward charge and reverse charge, you will notice one similarity, that the quantum of credit available in both the cases is similar. Therefore, the tax paid in cash by each of the service providers is same, 10, 2 and 3. Same is the case under the reverse charge also, that is the quantum of credit is same, 10, 2 and 3. Okay. So now what differs is actually the timing or the procedure of availment of credit under forward charge and under reverse charge. That is what we are going to see. The CENVAT credit availment under forward charge or normal charge, whichever you call it. Under forward charge, the service provider, when he provides service to service receiver, he issues an invoice, and then service receiver makes payment of value as well as service tax to the service provider. Now, at what time service receiver can take credit of the service tax paid by him on the input service? When he receives the invoice. Okay. Now he issues an invoice and receipt of invoice. Now this is the event, or this is the time at which it can avail the credit. So payment, whether he makes it or not at that time, or service tax whether he has paid service tax to service provider or not, these 2 points are irrelevant actually at the time of availment of credit. Only thing which is relevant is receipt of invoice. Service receiver, if he has received invoice from service provider, he can take the credit of the service tax paid by him on the input services. Whether he has paid the value of service or whether he has paid service tax on that service, it is irrelevant. Okay. Now, but there is one rider which is attached to this CENVAT credit availment, that he must pay the value and service tax to service provider within 3 months of this date. That is, within 3 months of the issuance of the invoice, he anyhow has to make the payment. It is not so that he doesn't make the payment at all to service provider. he has to make the payment to the service provider of value and service tax within 3 months, then only this credit availment will be valid. Otherwise, after 3 months, he has to reverse the credit of service tax which he has taken earlier, and he can take the re-credit only when he actually makes this payment of value and service tax. So in order to retain the credit which he has taken earlier, he has to make the payment of value of service and the service tax on such service within 3 months of the issuance of the invoice. But the event which is there for availment of credit by the service receiver in case of the normal charge or in case of the forward charge is receipt of invoice. So as soon as he receives the invoice, he can take the credit. Now let us see what is the difference in case of reverse charge. In case of reverse charge, when the service provider issues an invoice, there is no availment of credit. He has received the invoice, but he cannot take the credit. Service receiver can take the credit only when he has made the payment of service tax to the central government. Then only he can take the CENVAT credit. Now here also the payment of value is not relevant. What is relevant is only the payment of service tax. And in this case, since it's a reverse charge case, so in this case the service tax has to be paid to the central government. So under reverse charge, service receiver can take the credit of the service tax paid on the input service at the time when he has made the payment of this service tax to the central government. He has deposited this service tax with the central government, and he can take the credit of this service tax. This is the difference. So quantum is same in both the cases, but what is different is the timing of taking the CENVAT credit. Now, actually what difference has now come in this case is under reverse charge provisions. Earlier under partial reverse charge and under full reverse charge, the timing of taking the CENVAT credit was different. But now this has been aligned. Okay, now let us understand it with the help of an example of availment of CENVAT credit under full reverse charge. In fact, the case which I have explained you under reverse charge is the case of full reverse charge only. I have assumed that in this case the service tax was payable under full reverse charge. Under partial reverse charge, what will happen, we'll discuss after some time. CENVAT credit under full reverse charge. Now payment, in this case, the value, first case, let us take the first case, value has been paid, service tax has been paid. Under full reverse charge, we know that this is the event which is relevant. Rest of the events are irrelevant. So CENVAT credit will be available since service tax has been paid. In second case, value has not been paid, but again service tax has been paid. So CENVAT credit will be available because availment of CENVAT credit is only dependent on this event and not this one. In third case, value has been paid, but service tax has not been paid. Now, since we have said that service tax should have been deposited with the central government and this has not happened in this case, so CENVAT credit will not be available because payment has not been made to the central government of the service tax. Now we come to the partial reverse charge. Just now I told you that full reverse charge, under full reverse charge, payment of service tax to central government is the event when you take the credit. Now under partial reverse charge, actually there are two portions. One portion service receiver deposits to the central government and another portion service provider has to deposit to the central government. Total service tax charge suppose is 100 rupees. Then there could be a case where service provider has to pay 60 rupees to the central government and service receiver has to pay 40. So how will you determine the credit availment in this case? In this case, there will be two parts. In two parts, we'll determine the credit availment. Service tax payable by service provider and service tax payable by the service receiver. The service tax which is payable by the service provider, there we will determine the CENVAT credit availment as per forward charge. We have already determined that how we will determine the CENVAT credit availment for forward charge, and service tax payable by service receiver will be as per reverse charge mechanism. Both these we have discussed in detail, that how you will avail the credit in case of forward charge and in case of reverse charge. We'll understand it with the help of an example. CENVAT credit of the service tax paid by the service receiver to the central government. So this is the service tax which the service receiver has paid under reverse charge. This is a partial reverse charge case. Now we are assuming that suppose out of 100 rupees, 40 rupees service receiver has to pay to the central government, and we are dealing with the credit availment of these 40 rupees. Now case 1, value has been paid, service tax to central government has also been paid, and service tax to service provider portion of service tax has also been paid. Credit will be available. But why credit is available? Because we are seeing only this event. We are not concerned about the rest of the two events. Payment has been made to central government, so credit will be available, like in case of full reverse charge we see. In second case, the value has not been paid. Service provider has not been paid the service tax also. We make service provider two payments: value of taxable service and the service tax which he has to deposit to central government. So both these has not been paid. Only the service receiver's portion of service tax has been deposited with central government. So this portion he can take the credit. Then in third case, he has made full payment to service provider of value as well as of service tax, but he has not made the payment to the central government of his portion. So he cannot claim the CENVAT credit of the portion which he has to deposit to the central government. The credit will not be available. Second portion is the portion which service provider has to deposit to the central government. How service receiver will take credit of this portion. In this case, let us see first case which is given in this example. Value has been paid to the service provider. Then service tax, the service tax which service provider has to deposit, that has also been paid to him, and invoice has also been received by the service receiver. CENVAT credit will be available. Now here also we are concerned only about this event. These two are not relevant for determination of CENVAT credit availment. Okay. Second case is payment of service tax as well as value has not been made to service provider, although they have been made within 3 months. That was the rider which was attached to it. So we are assuming within 3 months this payment has been made. But as of now, the payment of value as well as service tax is not made to the service provider. Only invoice has been received by the service receiver from service provider. So CENVAT credit will be available because this was a condition which need to be fulfilled. In third case, we have made full payment to service provider, but invoice has not yet been received from the service receiver. It could be a case of advance which has been made by the service receiver to service provider, but invoice is yet to be issued by the service provider. So till the time invoice is not issued, CENVAT credit is not available to the service receiver. So this was a credit availment in case of partial reverse charge and full reverse charge. Under full reverse charge, you will follow the reverse charge mechanism, that is the payment of service tax to the central government. Under partial reverse charge, we will break it into two parts: the credit availment on the service tax payable by service provider and service tax payable by the service receiver. Hope this provision is now clear to you. The next one is export goods. Now under Rule 5, the credit is available. The refund of credit is available when a manufacturer exports the goods without payment of duty, and when a service provider exports output services without payment of service tax. Okay. There is a certain amount of refund which is available. There is a formula for calculating that refund. There are certain restrictions, certain safeguards also which have to be applied. There are limitations also for getting this refund that we'll not go into. But what is there is that you will get a refund if you have export goods or export service. Okay. Now export goods, export service. Now what is an export service? That was already defined under this rule. But what is an export goods? That was not earlier defined, because that can only give us a clear idea that on what type of goods, when the goods will qualify as export goods, then only the refund under Rule 5 will be available of CENVAT credit. So export goods has now been defined under Rule 5. An explanation has been inserted and export goods has been defined. Export goods means any goods which are to be taken out of India to a place outside India. So it is very important that goods should be taken out of India. Now, if we go by this definition which has been provided, so it becomes clear that all of you must have heard the concept of 100% EOU. In case of what is 100% EOU? 100% EOU is a unit which exports its entire production. Whatever it manufactures or whatever services it provides, then entire services are exported or entire production is exported. Whatever it manufactures, whatever goods it manufactures, it exports them. That is EOU. So EOU, whenever you make any sale to EOU, whenever it procures goods from India, from any manufacturer, whenever any manufacturer sells goods to EOU, then he is entitled to export benefits. It is deemed to be an export. It is deemed that this is also an export, and he gets deemed export benefits. Okay. But if we go by this definition of export goods, whenever we clear the goods to EOU, then that will not be an export goods. Okay. And therefore, the clearance of goods to EOU will not be eligible for refund. Whenever we clear the goods to EOU, because EOU the goods which we have cleared to EU, they are not export goods because they are not going out of India, they are within India. But to a unit which is 100% EU, which we are deeming to be an export unit, that no, we are not deeming in fact, but this transaction we are deeming to be export. But if we go by this definition, then the 100% EU will not qualify for this refund. So if any goods have been cleared by a manufacturer to 100% EU, then that will not be eligible for the refund. And in case of SEZ, now what is an SEZ? SEZ is a unit, SEZ is a place. This is also within India, but we consider it to be entirely a separate island on the Indian territory. That means we consider it to be a place outside India. Now, we have already said that goods should be taken outside India. So whenever a manufacturer moves any goods to SEZ, then this will qualify as export goods, because SEZ we take for all purposes. We take SEZ to be a place outside India. For all commercial purposes, we take SEZ to be a place outside India. So this will qualify as for refund under Rule 15. Okay. Rule 5. Next is the refund of CENVAT credit under Rule 5B. Now, under Rule 5B, what refund is available? Let us understand that. Whenever an output service is provided, we use certain inputs and input services for provision of this output service. Okay. Now, if this output service is a reverse charge service, then it is quite possible that the output service provider is not able to fully utilize the credit of inputs and input services. Okay, he may not be able to utilize because the service tax, either in case of full reverse charge, he doesn't have to pay service tax at all. Then he might not be able to utilize his credit fully. Or in case of partial reverse charge, he has to pay a portion of service tax on his output service. Then also it is possible that he may not be able to utilize his entire amount of inputs and input services credit. He makes some amount of credit of inputs and input services may remain unutilized. So that credit is allowed as refund. But in this rule, the services should be notified. First of all, these services need to be notified. Now, this refund cannot be allowed in case of full reverse charge services. Why? Because full reverse charge services are not output services. Under CENVAT credit, the output service has been defined, wherein the full reverse charge services has been specifically excluded from the purview of the output service. So when we talk about the refund of CENVAT credit, it is very obvious that refund of CENVAT credit unutilized on inputs and input services used in the provision of full reverse charge service will not be allowed, because full reverse charge service is not an output service. Now what is remaining is partial reverse charge service. So whatever inputs and input services are used in the provision of a partial reverse charge service, and some credit has remained unutilized on such inputs and input services, then that will be allowed as refund. Okay. Now how this refund has to be calculated? In this notification, a specific formula is also there. That will not go into so much details, but you should only know that partial reverse charge services are eligible for refund of inputs and input services credit which has remained unutilized. Now, the services which were notified earlier for Rule 5B, that means if these are the output services, any of these services are provided as output services, and some credit on inputs and input services has remained unutilized, then that will be allowed as per the provisions which are contained in this rule. As per the formula, the refund of the CENVAT credit on inputs and input services will be available. These services were service portion in the execution of works contract, renting of a motor vehicle to carry passengers on non-abated value, and supply of manpower for any purpose or security services. Now, you all must be aware that with effect from 1st April 2015, the manpower service as well as the security service has been removed from the partial reverse charge. In fact, it has been shifted to full reverse charge. That means now the service tax is payable on manpower service as well as the security services on full reverse charge basis. All the entire service tax has to be paid by the service receiver. So since we know that under full reverse charge, this Rule 5B is not applicable, so this has been removed from this Rule 5B applicability. That means Rule 5B now will be applicable only on service portion in the execution of works contract as well as renting of motor vehicle services. Now, reversal in Rule 6. Now, Rule 6 not to apply in case of the ethanol. What does it mean? Ethanol, the production of ethanol for purpose of blending with petrol is exempt from excise duty. Okay. Now, whenever a product is exempt from excise duty, whenever a manufacturer which is not liable to excise duty, then in that case we know that the Rule 6 has to be applied, and as per Rule 6, the CENVAT credit on inputs, input services and capital goods cannot be availed. Or if you have taken the CENVAT credit, availed the CENVAT credit of inputs, input services or capital goods, then that need to be reversed. And further, the CENVAT credit taken on the common inputs and input services also need to be reversed. Okay, in general, under general condition, this is the procedure which has to be followed. That whenever you take a CENVAT credit on the inputs or input services or capital goods used in the manufacture of the exempted goods, then it has to be reversed or it cannot be taken in the first place. But ethanol has been exempted from this restriction of, or you can say ethanol, in case of ethanol, reversal is not required. Let us go through, for your interest purpose, this has been put, that how you produce ethanol. Ethanol is actually produced when you crush sugarcane, you extract the sucrose juice from it, and bagasse is left. Now, this sucrose juice is again, from the sucrose juice we extract the sucrose. And after that, we get the sucrose molasses, which is actually the waste, we can say. This sucrose molasses undergoes the process of fermentation and distillation, and finally the ethanol is produced. Okay. Now, this is the production process of ethanol, and this is actually exempt from excise duty. Now, we are telling that Rule 6 reversal is not required in this case. That is, no reversal of CENVAT credit under Rule 6 in case of ethanol. The condition which need to be fulfilled is that first of all, this ethanol should be produced from molasses. This molasses is generated from the crushed sugarcane. This we have seen in the last slide, that how this ethanol is produced. That is why I have explained you that how ethanol is produced. That we crush the sugarcane, we get the sucrose juice, and sucrose is also extracted, and we get the sucrose molasses. So this sucrose molasses should have been generated from the crushed sugarcane. And then the next is in the sugar season 2015-16. Next condition for non-reversal of credit is that ethanol should have been produced in the sugar season 2015-16, starting from October 1, 2015. This is only limited, this benefit is only limited only to this period, that is sugar season 2015-16. And next condition which needs to be fulfilled is that this ethanol should have been supplied to public sector oil marketing companies, which is IOCL, Indian Oil Corporation Limited, HPCL, Hindustan Petroleum Corporation Limited, and BPCL, that is Bharat Petroleum Corporation Limited. So, the reversal of CENVAT credit under Rule 6 will not be required in case the ethanol is produced from sucrose molasses, which have been generated from crushed sugar. This non-reversal is applicable only for this period. It is not available forever. It is only available for this particular period. So this is a period-based exemption. You should note this point. And this is available only when this ethanol is supplied to IOCL, HPCL and BPCL, these public sector oil marketing companies. Then only this benefit is available. Next is amount payable under Rule 631. Now we know that CENVAT credit on inputs and input services is only available when they are utilized for manufacture of dutiable goods, or they are used in provision of the taxable services. In case any goods, any inputs or input services are used in manufacture of exempted goods, or they are used in provision of exempted services, then CENVAT credit cannot be taken on such inputs and input services. However, if CENVAT credit has been taken on the inputs or input services, then we need to reverse them. In fact, this reversal which we are talking about in this Rule 631, under Rule 631, there could be a case that the inputs and input services are commonly used in dutiable goods as well as exempted goods, or used in the provision of taxable services as well as exempted services. Okay. So in case they are commonly used, some common input is there which is being used both in dutiable product as well as exempted product, or which is used in provision of exempted service as well as taxable service. Then in that case, if we are not maintaining separate records, then we will not be able to make out that what is the amount of credit which was utilized or which was devoted, which was dedicated for the exempted portion. We will not be able to find out the exempted portion. So we cannot allocate the credit which is used for the exempted service or exempted goods So this reversal mechanism has been prescribed under Rule 631, that is a certain percentage of the value of service, exempted service, or percentage of value of exempted goods needs to be reversed. So if you reverse this much amount, then also we'll assume that you have not taken the credit. That means that will serve the purpose. Either you do not take the credit out of the inputs or input services used in manufacture of exempted goods, or you reverse the 6% of the value of the exempted goods. So this percentage of 6% is uniform. That means this has not changed. This has not undergone any change, but the exempted services, you know that service tax rate has increased with effect from 1st June 2015. The service tax rate has increased from 12% to 14%. So consequently, with effect from 1st June 2015 itself, the rate of reversal in 631 has also increased from 6% to 7%. Okay. Now, 7% of the value of exempted services need to be reversed under Rule 631 in case you are using the services both for, if you are using it for common purposes. That means exempted services also as well as for the taxable services. Now, reversal provisions under Rule 6. Rule 6, as we have already discussed, and this all you know, that whenever you use any inputs or input services in provision of both taxable services and exempted services, then you need to reverse the credit taken with respect to exempted services. In case of goods also, whenever you manufacture both dutiable goods and exempted goods, then the CENVAT credit taken on inputs and input services with respect to exempted goods need to be reversed. Okay, now a question might come to somebody's mind that we have taken taxable services and we have asked to reverse the credit on exempted services, the inputs and input services used in the provision of exempted services. But what about the non-taxable services? Okay, so non-taxable services, that means the services which are not liable to service tax at all. So this case or this particular thing has been covered under the definition of the exempted services itself. The definition of exempted services includes the service which is not leviable to service tax under section 66B. So non-taxable services or the services which are not leviable to service tax in the first place have been included in the exempted service. That means one has to reverse the credit taken on inputs and input services which has been used in the provision of the exempted service. That means the service which is not leviable to service tax. This has already been covered. Not leviable. This is the condition prior to amendment. So earlier also this case was covered. That means any service which is not leviable to service tax, in that case also this CENVAT credit taken on inputs and input services need to be reversed. But in case of the manufacture of the goods, exempted goods, this was not the case. In case of the manufacture of exempted goods, what if we manufacture the non-excisable goods? That case was not covered earlier. Okay. Non-taxable services, that was covered under Rule 6, you had to reverse the credit. But in case of the non-excisable goods, the reversal was not required because the reason for the same was that exempted goods and dutiable goods, or the dutiable goods, or you can say final product, the definition of final product as well as the definition of exempted goods specifically said that any excisable goods. So when it says any excisable goods, so it clearly lays down that exempted goods will only be those goods which are excisable in the first place. Okay, and dutiable will anyhow be excisable. You know that dutiable goods will only be dutiable if they are excisable in the first place. So exempted goods also need to be excisable. That means non-excisable goods were earlier not covered in this case. That was an imbalance in this rule. So any inputs or input services which were used in the manufacture of non-excisable goods, reversal was not required. Now how this anomaly was corrected? Rule 6 was amended and an explanation was inserted in Rule 6 which said that for the purpose of this rule, for the purpose of only Rule 6, that is, this definition has not been changed. These two definitions have not been changed under the respective rules. Only in Rule 6 an explanation has been inserted which says that only for purpose of this rule, exempted goods or final products as defined under Rule 2D or 2H will include non-excisable goods. Okay, but again I am reminding you that this is only for Rule 6. Only for the purpose of Rule 6, exempted goods will include non-excisable goods also. So when I say exempted goods will include non-excisable goods, so in that case reversal will be required when you are manufacturing the non-excisable goods and dutiable goods. Let us understand it with the help of an example. A manufacturer is there. It is using inputs and input services in the manufacture of dutiable goods as well as non-excisable goods. Okay. So in this case, as per the new situation or as per the post-amendment situation, now the credit has to be reversed. Had it been the earlier situation, then the reversal was not required. So this is the change which has taken place in Rule 6.
Let's come to the next amendment, which is there in case of Rule 9. Before discussing the amendments, let's look into the background of the amendment, some basic concepts. As we know that CENVAT chain continues till the time manufacture takes place. As soon as trading activity begins, that is, goods are not used by manufacturer but only traded, then CENVAT chain breaks, which implies that excise duty can be passed only by a manufacturer and not a trader. So, when a manufacturer or service provider procures inputs from a manufacturer, then only he can avail credit on such inputs, otherwise he can't take. But there is an exception to this general principle, that is first sales dealer and second sales dealer. They can also pass on the credit, though they are not the manufacturer. Second point which is to be noted is that there are certain conditions which are to be fulfilled by first sales dealer and second sales dealer, which has now become applicable to a registered importer. Now you must be wondering that why the provisions relating to CENVAT credit has been made applicable to a registered importer. See that an importer pays various custom duties on import of goods, and one of such duty is CVD, that is countervailing duty. We know that this duty, CVD duty, is CENVATable, that is credit of CVD is available. So to pass on the credit of CVD, the provisions of central excise have been made applicable to a registered importer as well. Now let's come to the amendment. What amendment has been made in CENVAT credit rules? Amendment is that the provisions applicable to FSD, SSD now applicable to an importer issuing CENVATable invoices. And what provisions relating to records? Relating to records so as to pass on credit. So what was the condition which was there in case of first sales dealer and second sales dealer? CENVAT credit in respect of inputs or capital goods purchased from FSD or SSD is allowed only if such FSD, SSD has maintained records. And what records he used to maintain? What was the peculiarity in that records? That is, he had to indicate the fact that the inputs or capital goods was supplied from stock on which duty was paid by the producer of such inputs or capital goods. That is, they were supplied from the duty stock which was on which duty had been already paid. And the second point which is to be noted in case of maintenance of records was that only an amount of such duty on pro rata basis has been indicated in the invoice issued by him. Now let's understand what do we mean by pro rata. Let's say a first sales dealer or a second sales dealer has procured 100 units and he sells to buyer only 20 units. So does it mean that the invoice should show the details of duty paid of all 100 units? No. What the invoice should show is that the excise duty to the extent of 20 units only will be passed on to the buyer. The excise duty of 20 units has been paid, so the CENVAT credit in respect of 20 units can be passed on to the buyer. So there are only 2 points which are to be noted in case of maintenance of records. The first one is duty paid stocks. The stock should be duty paid, from which duty has already been paid. And the second point is that only an amount of such duty on pro rata basis should be indicated in the invoice issued by him. So hope the amendments have become clear to you. Let's have a quick recap of the amendments. let's have the quick recap of the amendments so that you can recap them in the easy manner, all the amendments. Basically, there are 3 effective dates from which the amendments are become applicable. The first one is 1st March 15, then 1st April 15, and the third date is 1st June 15. First of all, we will discuss the amendments which became applicable from 1st March 15. As I discussed with you, the first amendment was made applicable in case of Rule 4. That is, CENVAT credit was allowed in case of inputs and capital goods which are directly manufacturer or output service provider. Second amendment which I have discussed with you pertains to Rule 4 only. That is, the time limit for return of capital goods sent to a job worker has been extended from 180 days to 2 years. It may be noted in this case that there is no change in the time limit pertaining to inputs. For inputs, it is still 180 days, and for capital goods, it is 2 years. The third amendment which I have discussed with you is that the time limit for availing CENVAT credit on inputs and input services has been extended from 6 months to 1 year of the issue of invoice. It may be noted in this case that there is no time limit in case of availment of CENVAT credit in case of capital goods. The fourth amendment which became effective from 1st March 15 is that export goods has been defined for the purpose of Rule 5 of CENVAT credit rules. Export goods means any goods which are to be taken out of India to a place outside India. Now, the fifth amendment which became applicable from 1st March 15 is that inputs and input services used in the manufacture of dutiable and non-excisable goods will also attract reversal provisions. And for this purpose, exempted goods or final products will include non-excisable goods also. There has been a notification relating to this amendment only, Rule 6 only, that reversal provisions will not apply in case of ethanol produced from molasses generated during sugar season 15-16. The last amendment which became applicable from 1st March 15 is that provisions relating to maintenance of records as applicable in case of first stage dealer or second stage dealer shall now also apply to an importer issuing CENVATable invoices. These are the amendments effective from 1st March 15. Now we will discuss the amendments which became effective from 1st April 15. There are 2 amendments which became effective from 1st April 15. The first one is that provisions relating to availment of CENVAT credit under partial and full reversals have been brought at par. The second amendment manpower supply or security services. The third effective date which is there is 1st June 15. As we know that the rate of service tax was increased from 12% to 14% from 1st June 15. So the amount payable under Rule 6.3 in case of value of exempted services has also been increased from 6% to 7%. It may be noted that the rate of reversal in case of exempted goods remains same, that is 6%. For exempted services, it is 7%. Hope this easy recap will help you in memorizing the amendments at a faster pace. And
hope you have understood the session, the amendments discussed in the session. In case you have any queries regarding this session, you may write to us. At shefali.jain@icai.in and swati.bos@icai.in. Thanks for the patient listening. Thank you.
thank you.